Hi, everyone. So we're just waiting for our next speaker. Um, I hope you enjoyed the last speaker, Claudine Moore. I know I really got a lot out of what she said. I don't care how long you've been in the business, a lot of the information you just need to hear again. I think the funniest thing she said was don't post a twerking video because, it could be a potential problem, you know? So, but I think that that's very informative. I think that the tone and how you say it and what gets said is very, very important. So that for me has always been a big issue. And I'm also conservative, so I don't put too much information out. Um, that's the good thing about how people respond to me is that I never put anything out that I feel like it's going to come back to haunt me. And like she mentioned, the cancel culture is very real. Things that is being said, no matter whether it was intentful or not, is still a problem. So, be mindful of those things. So right now, the only thing we're doing is waiting. So give us 5 minutes. I'm going to pause the screen while we're waiting for our speaker to come live. Hey, Samke, welcome. So you are live, just so you know. I'm gonna jump off and this way give you time to present. So sorry about your technical difficulties because we know how these systems are when we're live. So I'm getting ready to leave and let you take over.
Thank you very much. Okay. Good afternoon, ladies, and some gentlemen that I've seen are with us on this conference, and thank you so much for having me. Apologies for the delay. I actually figured out that earlier on when I had clicked on the networking tab, I had blocked access to my camera because, and at that time, I mean, I still had like I was still in my PJs quite early this morning. So I realized that was the issue, and I had to just troubleshoot that quickly. So many apologies for the late start, but thank you very much for staying on to engage with me on this discussion, which is finance for non-financial managers. Just to let you know that, this will basically be quite informative and a little bit loose, because I know that in my background, a lot of people have an anxiety when it comes to finances. So I don't want to scare you off with big terms, and I'd like to just start off with a bit of a reflection and a chat around where we find ourselves as female entrepreneurs in the global landscape. And then I want to take you through an analogy that I will use to talk about the role of finances in our businesses, and also then just take you through some of the ratios that as a startup founder especially, you should be looking at for your organization after I've linked what they mean to you and your business. Okay, so I just want to put my time up here. It's not reading my mic. Can you hear? Oh, please just confirm you can hear me. I've received notification that you cannot hear me. Just let me know in the chat if you can hear me, please. Hello. Let me know you can hear me, guys, before I continue. We can hear you. Oh, okay, perfect. Sorry, I just saw a message here saying that you can't hear me, but you can hear me, so that's perfect. All right. So I just want to talk about a little bit of the landscape we find ourselves in as African women in entrepreneurship, especially, and actually just African women in general. So a World Economic Forum reported last year that 22 of the world's richest men have more wealth than all the women in Africa combined. Now, if you consider that Africa has a population of about 1.3 billion, and we've got about a 50-50 gender split between men and women. Of course, I'm ignoring for, below the working age or above retirement age, but we can just say that 650 million females on the continent, and 22 of the world's richest men have more money than 650 million females in the African continent. And that just goes to show you that, hang on a minute, the playing field, is not level, and there must be definitely something wrong about the playing field that we are entering and looking to create wealth in, more than anything. And also, just if you look at the top 10 or even 20 and 30 richest people in the world, you'll notice something. One, majority are male. Two, majority are white male, and those that are not white, they are Asian. And three, of the females that sit in the top 10 and 20 richest people on earth, they are white, and they have inherited their wealth. They're not self-made. So again, that speaks to the reality we find ourselves in. And I'm just painting the landscape here so that when we get into why it's so important to understand these financial tools, we also know perhaps why historically we haven't managed to penetrate those upper echelons of wealth creation in the world. So basically, we know that there's no shortage of Black entrepreneurs, female entrepreneurs, and entrepreneurs on the African continent. But typically, when it comes to entrepreneurship, we tend to rely on having a fantastic idea, which is great, but no one ever generated wealth just by having an idea. It's the execution of the idea that generates wealth for you. And in that execution, what do we tend to rely on? We tend to rely on hard work and lots of prayer. Now, I always say that, yes, we need to pray as if everything depends on God, but we need to work as if there is no God. And in that working, and we know that Africans are not shy of hard work, however, in that working, we tend to not work very smart. And what do I mean? We tend to not apply the science of business when it comes to our entrepreneurial endeavors. And finance and understanding our financial metrics is definitely one of the biggest pillars of that science. So if you look at that, then you'll realize that, hang on a minute, maybe it's in us starting to formalize and starting to add more scientific measures and tools into how we run our businesses that could actually be the differentiator between us just simply working hard and continuing to come up with a lot of ideas, and actually then creating ideas that turn into sustainable businesses that we can go on to list and that we can create wealth from for ourselves and also for our future generations. Just as an aside, another interesting statistic that was issued by the World Economic Forum at the last Davos meeting this year, 2020, showed that in South Africa anyway, if a person is born into a poor family, it takes them 9 generations to go from being poor to earning the average wage in South Africa, whether that's via salary or entrepreneurial endeavors. Whereas in your Scandinavian countries, like your Norways, it takes 1 generation. So again, that just paints the picture of how fast and how far we need to travel in our wealth generation activities for us to actually start seeing a meaningful difference. And therefore, we need to definitely be working smarter in ensuring that we in as short an amount of time or a space of time as possible. Right. Before I go into the actual ratios of finances, I wanted to talk to you about even just the landscape of entrepreneurship. This is an African Women in Tech conference, and I looked at I've been investigating the top startups, not only in South Africa, but also in the see what makes them successful. I don't know if Annie did introduce me, but I'm in the business of financial literacy education, and my background is in private banking, and I pivoted into financial literacy training after doing an MBA research into why Black South African females are the most over-indebted in the country, because our financial literacy surveys showed that. When I went into workshopping, but obviously with the COVID-19 and the lockdown restrictions, I couldn't do that anymore. And so I was looking at ways of actually now pivoting and taking the financial literacy training, which is statutory in South Africa, and taking that digital. And so when I was just investigating a couple of the tech startups that have managed to do well, I realized that they've got these elements in common. Number one, none that I came across had one founder. It's always 2 or 3 or 4 co-founders. So that showed me immediately something that I was lacking in my current format, because I'm a single founder. Yes, I have a team of trainers, but I'm a single founder of my business. And that's maybe something you can start thinking about if it applies in your business as well, where it's only you that the business is relying on, because that then tends to present a big risk, both financial and operationally, to your operations. And then number 2, one of them had tech expertise and the other had industry expertise. So if you are looking at a tech company that is in logistics, for instance, one of the founders will have a tech expertise, then the other will have logistical expertise. Then number 3, they were either former executives of a big company, or they were university dropouts, but of Ivy League universities. So we tend to glorify the story of being a university dropout and becoming an entrepreneur, but can we look at what university they dropped out of, i.e. what skills and competencies and IQ would they have had anyway getting into that university? And then finally, solve everyday problems. And again, you may be asking yourself, where's this woman going with all of this? But sometimes it's even just the foundation or the structure of our organization that is what hinders us from success, and not only the metrics that I'm telling you about. Because if you are on your journey to wealth and your business is your vehicle, many entrepreneurs tend to say, we need more money, we need more money, we need more money. And if I'm using the analogy of a vehicle, you could be saying we need more fuel, we need fuel, when actually it's the engineering of the vehicle itself that is what's causing you not to reach your destination. And so I found this quite interesting, just as something you can start to think about within your own businesses if you're an entrepreneur. But taking it now to the finances, the financial side of business. Why do we look at these numbers? Why do we have accountants? Why do we have auditors? And as a startup or a young business or a small business, it's very tempting to not look at these because, as long as the electricity is paid, as long as staff salaries are paid, as long as I'm delivering the goods and services that I am in the business of doing and the money's flowing, I should be good, right? But you may find that you're not operating as efficiently as you could, you're losing money where you didn't need to be, or you are actually on a backward trend in terms of your revenues or your business. So before I take you through the actual ratios, which I will do, I thought it's first quite important to quantify where we're working and the landscape we're working in as African women, the challenges that face African women, and also just to look at maybe it's in the foundation of our businesses. Maybe it's in the foundation of our businesses that the issue is, before we even go into now diagnosing how we look at the operations of our business. So first and foremost, when it comes to entrepreneurship, what are we doing? Entrepreneurs are in the business of solving problems. And unfortunately, COVID-19 has shown that many entrepreneurs were freestyling, or many entrepreneurs were in the business of nice to haves and not essentials. And that's why the revenue has dried up. And if you can constantly ask the question, what problem is my business solving? You will then be able to either pivot should the problem have changed, or to reconfigure or redesign whether you really still should be in this line of business if the problem no longer exists. We'll look at your Encyclopedia Britannica. We'll look at your Nokias, for instance, for examples of a big business that went out of business because the problem they were in the business of solving no longer existed, and they didn't pivot quick enough and therefore ceased to exist. And why do I make this point? I make this point because the numbers help us to diagnose the problem. Help us to diagnose, A, does the problem still exist? Help us to diagnose, B, how big is the nature of the problem? And it helps us to diagnose, C, is it worth my time and effort to continue solving this problem? Because basically our revenue and our turnover is the reward we get as entrepreneurs for solving this problem. Okay? We also want to look at who is willing to pay for this problem that we're solving. So sometimes the users of our solution are not the people that will pay us for the solution. We'll look at an example of WhatsApp, for instance. WhatsApp, acquired by Facebook, until recently, it was very unclear how they were generating revenues or turnover from WhatsApp, if at all. What we did know is that they were growing their subscriber base and their user base annually, sitting at about 2 billion worldwide last time I checked. And so now they're monetizing it by WhatsApp payments, for instance, that they've recently launched. But before, they were using some of the insights from users of WhatsApp to then cross-advertise and investigate user usage on their Facebook and Instagram platforms, which is what they monetize. So sometimes your product, the user of your product, will not be the one that actually pays you for that. So where's your money coming from? Or how do you use this product to then plug in to another product or service that you can monetize? Again, that'll help you use the tools of revenue generation, not just to look at the finances and say, this is something that I shouldn't be, a business or a product I shouldn't be in because I'm not making money from it. Sometimes there's non-financial benefit, or sometimes there's delayed benefit, but that asset or that business unit or that product or service is of strategic importance to you, okay? And then how much will it cost me to solve this problem? That's your cost of sales, that's your cost of operations, and that's really your baseline in determining whether or not this is an avenue you should be pursuing or how you should be pursuing it in the most effective way. And there are various names that we can term for this, whether that's a break even, whether that's cost benefit analysis. But for me, it's more important for us to start understanding of what use these tools are, because more often than not, non-financial people tend to shy away from the big terms and the big ratios and the jargon that is used in finance, simply because we cannot connect the dots between what this financial tool is and how it applies to my business or how it'll help me in my business. And so I guess I'm using this to just, again, keep your interest and explain that we are getting to the ratios, but this is the journey I'm taking to getting you there. All right, now that we have that, we can look at some of the ratios that you should be considering and at least asking of your business once a month, once a quarter, at least. And so that you know if you're still on track and so that you can answer the many questions we've now worked through in these past couple of minutes and why they're important for you to stay in business and to be clear on them to create this vehicle that you'll use on your journey to wealth. So I hope you've got a pen and paper in hand and that you will be taking these down. And the first one we want to look at is the working capital ratio. Now, before you switch off your laptop or your tablet or your device and throw it away because I'm getting into jargon, let me explain what it means. Working capital ratio basically says, do you have enough assets as a business, as an entity, to cover your liabilities? You don't want to be in a position where you don't have enough current assets anyway. Current assets that you can liquidate if they're not cash, so if they're stock, for instance, or cash then for you to pay your current liabilities. So it speaks to the health of your short-term operations. It speaks to fuel. Do you have enough fuel to keep your vehicle going in this journey to wealth creation? And how you work that out is that you say it's your current assets, and your current assets are any assets that you can liquidate fairly quickly. We tend to use 12 months within the year for you to meet your current liabilities, which are your expenses or your debts that are due within the year. Okay. If we were face to face, I'd be asking you now to give me some examples of current assets and current liabilities, but please feel free to use the chat function to give me examples as well. So current assets, an easy one, cash, but you could also have stock, as I mentioned. Current liabilities could be your suppliers, for instance. That's or your overdraft, your financial obligations that you need to service, whether it's settling the loan or servicing the interest, if you're operating in a region where you can get credit. So that's one you really need to know. Current assets over current liabilities gives you your working capital ratio. But so what? I get an answer, and what does it mean? You want to get an answer of 1 and above, because if your current assets cover your current liabilities 1 to 1, you at least know that you can meet your obligations. You, of course, want to get that number quite high. 2 over 1 is a good benchmark that we use when we're looking at these ratios, so that you know you can at least cover your current liabilities at least twice using your current assets. Yeah? If you have any questions, feel free to pop them in the chat as I go along. Then the next one is your debt to equity ratio. So if you look at your total assets now over your total liabilities, so even those assets that will pay out, that will take longer than 12 months to liquidate, and even your own equity, the own cash that you've put into the business, can you get it out? Okay, so or rather, can you use that to pay your total liabilities? That tells you, if you are still solvent and that you have enough assets in your business, and that also helps you when you're now setting your annual targets or your annual goals, which a lot of startups you don't do, but it sets your annual goals and your annual targets, because you know that the more you keep in reserve, the more you reinvest in the business, the more you're growing the assets of the business. So that's quite important. Another one which I quite like, and which especially in the world of digital and tech, we can get away with, is this gross profit margin ratio, which basically says that of all revenues you're generating, of all the rewards you're getting for doing this work, how much do you keep as for yourself as the business owner, in terms of, not yourself as a business owner, because then that's dividends. Let me rephrase that. How much is kept in the business for operations, i.e., the reward we get for solving this problem versus what it costs us to solve this problem in terms of cost of sales, the direct cost. So not electricity and staff and accounting fees and everything else. So the direct cost of this product or service. And then as a margin, how much are we making there? And what that tells us is, if we're using the vehicle analogy again, it's fuel efficiency. How fuel efficient are we? How much mileage? How far do we go on the fuel that we have or the revenues that we get? How much of it do we keep? How do we operate efficiently to make sure that for every dollar or shilling or naira we get in, we keep more of that for our operations as opposed to that going to the cost of actually delivering this good or this service. And then you look at your net profit margin ratio. So your net profit margin ratio is your net profit over your revenue. So the absolute bottom line over the revenue or your total sales. That's your net profit margin ratio. Apologies, I realized I didn't give you the calculation of the gross profit margin ratio. That is your gross profit, which is your sales less cost of sales, gives you your gross profit, and you take that and you divide it by your revenue, your top line. It just shows me that for every dollar, am I keeping 30 cents towards my operations, and 70 cents is going towards actually delivering this good or product or service, and how you start asking then how do I start keeping more of that for my business? Okay. Then the fifth one may or may not apply to you, but I will speak about it just in case, because a lot of startups fail because of poor cash flow management. We deliver the work, but it takes long for us to get our money back to keep us in operation. And this is accounts receivable turnover ratio is one of them, is one of the tools that helps you to manage this or to diagnose this. And basically what it says is it's your sales divided by your accounts receivable. So of my sales, how much of them are actually cash in bank, or how much of them sit as clients that still owe me? And that is very crucial in terms of the timing of when you receive your payments. We know that some company clients, it's easier for us to say, you pay cash on delivery, or we're running a subscriber base. If you don't pay the subscription fee, we cancel your subscription. Or some of the businesses we do the work, we deliver, but have to wait to get paid. And so we need to start thinking about all those things, because then, again, using the vehicle analogy, we've traveled the distance on our reserve fuel. We've used our own fuel to transport this customer who's going to give us the money after they've reached their destination. Do we have enough to do that? The saddest cases we see with entrepreneurs is where they don't have enough, they get a big order, but they don't even have enough money to deliver on the order. Then you start getting into the negotiations of prepayments or deposits, and some clients say, no, we're not interested, especially the larger corporates, deliver the work and we'll pay you after 30 days, as an example. So these are some of the just 5 simple tools that I don't want to scare you with, but that I want you to start thinking about, because if you start thinking about these 5, if you start identifying them in your own operations, it'll then lead you to ask other questions of either A, your accountants, if you have someone, an external party preparing your books, or even yourself, to say, hang on a minute, if I need to measure my revenues, if I need to measure my gross profit margin ratio, I need to know what my total revenues are. Do I even have a formalized way or tool of measuring my total revenues, or am I just watching money come into my bank account, and as long as there's enough to go out, I'm fine? Do I have an accounting system? Do I have an invoicing system? Do I have a reporting system every month for me to see, is my vehicle, which is my business, towards wealth still moving forward, or is it in reverse? Does my problem that I'm solving, which is my reason to exist as an entrepreneur, is the problem still there? And if it's there, is it still as big as I diagnosed initially when I went into business? If not, has it changed, meaning I pivot to meet that problem? Or has it ceased to exist, meaning that it's only a matter of time before my business no longer has a reason to exist? And in accounting terms, we call that a going concern. At the end of every year, when accountants and auditors prepare financial statements, they make a proclamation or a statement as to whether the business is still a going concern or not. Some of us are waking up every day, expanding energy, expanding resources on business models that are no longer going concerns. Not because we are bad entrepreneurs, or our processes are bad, or our ideas or solutions are bad, but simply because the problem we were solving has ceased to exist. So these tools help you to keep an eye on where you're operating in terms of the landscape, your clients. Are they still buying from you? Is your turnover growing? Are they buying from someone else? There's a new competitor. Are they buying something else? The problem no longer exists, and therefore helps you to keep pivoting and changing. If you look at the businesses of the top richest people, we can actually say men because they're men, you look at how the business may have started off as one thing, Amazon, delivering goods, to something else, Amazon on demand. They're now doing books. They're now doing, other functions. They're constantly pivoting. And if you look at Facebook, for instance, and the different businesses they bought into, constantly pivoting. And so these ratios are there to help you to not only achieve what you set out to achieve in your current business and the way it stands, but also to identify those times in which you may need to pivot so that you can start to adjust accordingly and stay on course to creating wealth. Because we need to start changing the narrative and to start changing the makeup of the wealthy in the world, starting with ourselves, African women on the continent, in business, in technology, and building businesses that are sustainable, that last, that will go on to list, that we will hand over to our children and their children's children, and start creating wealth that transcends beyond just our own livelihood and well-being. I think my time is up because I see someone came onto the screen. Do you have any questions for me? I don't know how this works. Ani, are you there? Do you want to join me and just sort of wrap up or close this segment? Ani is WhatsApping me saying my time is not up. Well, I need questions. My time may not be up, but I need any questions that you guys have because that's it from my presentation. If there are no questions for me in the chat, then yeah. Annie, if you can come in, that's it for me in terms of what I had prepared for you. I don't see any questions coming through in the chat. Maybe you have questions for me, you can come in and discuss.
Okay. All right. So thank you for your presentation. Very informative. Now, you've worked with a lot of investors, financial institutions, and entrepreneurs, right? So what have been some of the things that you've noticed as in terms of how people are spending? Do you think that they're budgeting enough? Do you think that there are certain things that they just don't take into consideration when you're consulting with them? Because I know you consult not only small businesses, but also, big corporations in South Africa.
Thank you for that question, Annie. I think the biggest problem I see when it comes to, especially, I want to speak to entrepreneurs and small to medium-owned enterprises. It's basically just that lack of direction, the lack of goal setting, the lack of benchmarking, and the lack of consistently checking if they're still on track, which is why I tried to break this presentation down, and start to talk first and foremost around the landscape within, the need for us to be scientific about our operations, because I've seen a lot of entrepreneurs that work hard. They work hard, they're spending the hours. But because there isn't that formalized methodology, you find that over time, the entrepreneur exhausts themselves, or over time, the entrepreneur is running an operation that is solving a problem that no longer exists. So what I've seen is that unless those are very clearly defined, the questions that the financial tools aim to answer are not being asked. The answers that the financial tools provide are not being used to improve operations. And so I guess with this talk that I prepared for you, I was trying to connect the dots more than anything, connect the dots between the financial tools, the ratios, the metrics, to the fact that this actually diagnoses whether your business will still be alive in 12 months' time. And if so, what you can do to make sure that you're operating more efficiently, or that you need to pivot if your product or service is no longer being consumed or in demand as it was before. So those are some of the biggest gaps that I've seen with regards to financial, especially financial metrics. And not only in my consulting time, but also while I was still a private banker, I did sit on our entrepreneurship development program and did mentor a number of startups. And more often than not, it was the fact that the entrepreneurs couldn't link what the financial ratios and tools are actually telling them about their business.
Right. So one of the questions that Joy asked in the chat is, how does a business prepare for tough times? How do you survive it? I mean, like right now, even no matter who I'm talking to, I just tell everyone maintain, just maintain, right? But maintain does not talk about the specifics of being in a survival mode or actually, projecting out in case anything could possibly happen. What advice would you give to someone in order to prepare for something? No one can truly prepare for COVID because we know it just wiped out some businesses completely. But what are some ideas that you've seen or things that have worked in South Africa that you saw, how someone pivoted and what made them money?
Perfect. I call COVID a car accident, a car crash. If we're using this analogy that our businesses are vehicles to wealth, then COVID was like a car crash. Now, some companies or some entrepreneurs have managed to just get by using their savings or their reserves, where they're still just trying to see what this new normal looks like, and trying to determine how they can pivot. Some businesses have been easy. So, for instance, I know that a number of people that were in the business of fashion went from producing garments for luxury wear into producing PPE equipment. So your masks, or even sourcing from their suppliers, gloves and stuff like that. And so that's one thing that I've seen. But South Africa, we've been on a hard lockdown since March. And you would think that for someone like me or a business like mine, where we're in the business of financial wellness, we'd be milking it, we're making money because companies are coming to us to help their staff with their financial challenges. But businesses are saying, Samke, we can't take money to pay you to teach our staff how to be financially savvy when we risk then retrenching them a month or two later. So you'd rather hold on to that money to pay them a salary at least, because they'll have a bigger problem if they don't have a salary than if at least they have a salary and trying to figure out what to do with it. So it's really come as a big surprise and as a big shock to many businesses, and really presented problems that you wouldn't typically have learned about or even prepared for in business school. It's an anomaly, it's a pandemic that has taken many companies by surprise. But I think it comes back to that key question, which is, what problem are we solving? And it's really forced me to go back to the drawing board to say, what problem was my consultancy solving, which is the problem of financial wellness? Okay, but what about that? Was that a nice to have that we financially do better with our money? Or was that an essential, i.e., how do I make money? So it moved me, it made me realize that my offering or my solution was a nice to have, but it wasn't actually an essential. And so I've personally gone back to the drawing board to figure out how I pivot. We all know that globally the statistics on gender-based violence have increased across the world, whether you're sitting in a first world country or a third world country. And one of the pivots I've done is then to use the financial wellness to address the issue of gender-based violence. So to use that as a tool that women can use to get out of abusive relationships, and how we then package and tailor make that, as opposed to it's just being you're earning a salary, how do you make sure that more of that salary goes towards investments, or that you know what investments to choose? Now we're pivoting it to an essential to say, if you're a woman stuck in an abusive marriage or relationship, or you're perhaps in a marriage that's headed for divorce, how do you prepare for divorce? How do you prepare for a life by yourself? Who do you contact? How much money do you need in the bank? What is the cost of legal action? etc. So that's one of the ways from a personal angle that we're pivoting, but also I've given you some examples of other businesses in the country that have pivoted to use this me. But before we jump at the opportunity of making money during COVID or pivoting your business or your operations, it's important to do a cost benefit analysis. What is it going to cost me, right, to address this new problem that I've now identified? And what is the benefit of me solving this problem? Remember those questions you asked: who's going to pay me? Are they able and willing to pay me? So there are many women across the world that say, Samke, we love your services, but are they able to pay for my services? And what they're able to pay, is it enough for me to sustain my business, my operations, and my personal needs as an entrepreneur? So we shouldn't just rush to pivot. We should do the necessary work in determining whether or not it's worth it for us to pivot. We may find ourselves in a position where we actually shut down the business we have as is and start again something completely new. That is happening all around the world, and that is something that we need to remove emotion from when we are faced with trying to make that decision.
Okay, very good. The next question that we have is, what is the easiest and most effective way of benchmarking markup? Because they said, some people are in the business of robbing people. Now, you and I both know that, Gucci will make a belt and put that Gucci label on and put $2,000, whereas you can go to your nearest, any store, same belt, could be leather as well, and it could be $100. So how, as a business, should you think about benchmarking your prices?
That is a very fantastic question, Annie. And again, there is a science to that. So there is what is called in strategy the cost versus differentiation consideration. So do you compete on cost or do you compete on differentiation? Let me make an example. If you look at a Walmart, they compete on cost. They say, we will give you these products cheaper than anyone else, okay? So they're competing on being the cheapest. Now, it's very expensive to compete on being the cheapest because for you to undercut your suppliers, you may need to give up revenues or profits. So you want to have, that's a volume game. You're selling millions of units for you to make up that amount that allows you to compete on price. And that's a reality that many entrepreneurs can't adopt, or a strategy many entrepreneurs can't adopt because they don't have the pockets for that game. So we go for the differentiation, which is I'm unique or I am better. That is the differentiation strategy. So I know that I won't give you a loaf of bread as cheap as Walmart, but I'll give you a delicious loaf of bread with raisins and cherries, and I'll deliver it to your house, and it'll be hot and fresh out the oven, but I'm going to charge you for it. So before you even go into the gross profit margin ratio and look at what it should be in terms of the benchmark, you need to understand where you're competing. Is it on cost, or is it because on cost you're going to have a low gross profit margin? If it's on differentiation, it's going to be a high gross profit margin. Then once you've decided where you're playing, you can benchmark using your competitors. So you can benchmark using other companies that are offering a similar service, okay? To say, where are they operating? And but that benchmarking won't be on you trying to get on par with them in terms of the gross profit margin itself. When you're benchmarking with your competitors, you'll benchmark on price. So again, you may have Gucci and Fendi and have a belt that's similarly priced, but Gucci has a much higher gross profit margin than Fendi. Then it speaks to your cost of sales. Maybe Gucci has found a supplier in China or a leather maker in Italy that will give them a better price on the inputs of that product than Fendi. So then Fendi, if they're looking at Gucci's gross profit margin, will say, how come they're able, whilst we have similar selling prices, how come they're able to get a better gross profit margin? And does this speak to our operational efficiency? How do we negotiate better terms with our suppliers? How do we get our resources, our raw materials at better prices than what we're currently doing. So the gross profit ratio is more an internal number that you'll be looking at, an internal measure that you'll be looking at. You would start with the revenue to see what your competitors are doing. Then you can even use a gross profit margin to say, why are they doing better than us in terms of how much of every dollar or rand or naira in sales is going back into the business to fund their operational expenses.
Okay, thank you so much for taking the time to join us today. I know I crashed course on your door this morning, and you're very gracious. So just so everyone know, Samke and I are small announcement. It's things that we actually have to fine line, but we will be working on a financial literacy platform. So get ready for that. So stay tuned for it. But in the meantime, amazing presentation, Samke. Thank you for taking the time out. If you want to connect with her, feel free to go into her profile and check out her information there. But other than that, we will continue to have sessions where you're getting more money management type of conversations, because as we go further into time, it's going to take a while for all of us to kind of bounce back based on the current activities and the things that are happening right now in our world. So going.
Ani, can I say something before? Sorry to disturb you. This was very short, a short conversation and discussion I'm having with you. And, as Ani said, I was roped in just this morning, which I'd gladly do for Ani any day, which is why I couldn't prepare a full-on presentation for you guys. But, I tried to condense what's really key and important and you'd want to know into this short presentation that I had for you. But if you want a one-on-one discussion or one-on-one support, I do offer that globally, and I do have a global platform. So if you are interested in booking a one-on-one session, you are more than welcome to do that. Very affordable, only $75 for an hour, and we do that via Zoom or Skype or WhatsApp video calling, whatever the case is. My payment platform that I use is Flutterwave, so wherever you are in the world, you can arrange the payment. If you are interested in actually then having a one-on-one to dissect where your business currently is or how you can build up some of these measures and what programs you can even use or software you can use to start building this in for your business. But I do wish you all the best. Do connect with me. My Instagram handle is not in my profile. That's where I'm most active, actually. But I do want to connect with you and hear from you and how we can help for you to navigate these times.
All right. Thank you so much. We really appreciate it. And obviously, I don't know if you could see the chat feedback, but you're getting really nice comments on the chat feedback. So thank you again for coming in last minute and doing this amazing presentation. So everyone, we have 15 minutes before we start our next session. So what I would like everyone to do is to go into the networking session. So this way you get an opportunity to meet people from different parts of the world and socialize, get information, exchange information. On the left-hand side, you'll see the networking button, and it should say noun. You missed her social media. Can somebody post her social media? Samke, can you chat? Can you type your social media information link so that people could find it fairly easily?
I'll type it in my different social media, and I'll put in my email address as well if you'd like to reach me as well.
Yes, please put that in the comments, since the profile, you really didn't have time to fully update your profile based on us just trying to be rushing you to get on live. But in any event, as I was saying, please go into the networking for the next 15 minutes while we get the next presentation ready. It's the world of podcasts. Claudine, who you met earlier, and then you'll meet Tiffany. Tiffany works with Essence Magazine. I'm pretty sure you heard of it. It is a global brand, and I know you've heard of SMK because they come to South Africa, or they South Africa.
I've heard of it because I'm trying to get them to get me to the US. You know what I'm saying?
Right. So see, she's doing her plug. This is what you do. You do a shameless plug. So this way, when people are paying attention, yeah, I know you've got your information there. So please jump into the networking and give us time to set up the stage for the next presentation, which is the world of podcasts. You definitely don't want to miss this because this is a great way to get your voice out there, especially if you know that there's information that you'd love to share. This will be an introduction, part one, and then part two actually completes it, so that you can see from soup to nuts how to set it up, what to do, and whatever questions you may have, this is the best time for you to check into it. So for now, we're going to stop broadcasting on the live. We want you to go into the networking session, and then we'll see you in like 15 minutes. Thank you, everyone. Thank you, Samke. Bye.